For those of you who just joined, we just did a quick poll just to get, everyone's opinion on fintech, and the results are up. What's really surprised me is that 60% said yes to our digital banks going to overtake the big four banks. What do you think, Patrick? Do you think that's something that could happen?
Digital bank's going to take over the big bank. They're going to give them a run for their money. That's what I'll say.
Everyone beware, though. Patrick works for NABS, so he might person ask the question.
I'll try not to be as biased, but no, in honest opinion, I guess today in today's world with open banking coming out and everything, there's a lot of technology is definitely changing the scales of competition. It's lowering barriers. And I guess this is why we're here, to ask the experts what they really think.
Yep.
So interesting chat to bring up. But it's interesting to see that 60% of you think it's true. So definitely the people's push is there. People believe that the small banks will take over the competition in time.
Yeah, and in the second question, we see that 65% said that they think that open banking is a threat to privacy. What are your thoughts on that, Patrick?
I know that one of the experts has a strong opinion on this. So definitely when he comes in, you know who he is. I guess with anything, it's a matter of people perception, because you can offer probably the most structured and secure product, but unless the people believe that it's safe and they're convinced to use it, I don't think that privacy really plays an issue. I think if there's enough laws and enough security in place, it's protective. It's how people perceive it. And I think right now, with everything that's happening, privacy is a bit sensitive. But
definitely.
That's my opinion. Don't take
especially after Facebook and Cambridge Analytica.
Exactly, yeah.
And ANU being hacked and whatnot. Yeah, definitely.
Yeah.
Everyone just joined. We will be starting very soon, in a minute actually. And and our speakers are in a breakout room, so they will join us soon as well.
1 minute till we start, so stick in. So I'm just going to say, I saw a question by Alexander Weist. I'm going to ask that question at the end, because it's a really good question to ask. But yeah, I won't answer it now, just because I'll wait and see what the experts think of that question. Good. Also, yeah, that reminds me. Zoom, it can feel a bit awkward at times. Don't be afraid to have your video on. I know it says in the house rules to disable mute yourself, yes, but if you guys are comfortable with video on, I don't need to hear you guys, but if you want your video on, feel free to. And also on that point as well, use your reactions. They might be a bit cringe, but they give a sense of we're all in the same place in a way. So if you guys want to know where that feature is, it should be on your toolbar under reactions. You have a thumb up and a clap. And I can see Annalise just giving me a clap, so thank you. Okay, so I've now got the thumbs up. I'm going to bring the guys back into this room, and then we can go ahead with this presentation. Okay, let me just check if everyone's here. I've got save. Is Vivienne in the room? I can see Hunter and Vivienne. There we go. Okay. Well, on that note, I might just start the presentation. And I guess welcome you all to CCA's very first online event. We're making do with the certain circumstances using Zoom. So the idea behind Future of FinTech is we're bringing in a bunch of experts to kind of discuss what is the future of FinTech. Is it scary? Is it not? Well, these are the questions we're going to ask to them and see what they respond with. So just to start off before, a few house rules is we would appreciate if everyone remains on mute. There's a lot of people in this chat, and if a lot of people are talking over each other, it can get a bit messy. So we'd appreciate if you're on mute. Don't be afraid to show your video. We do like to see your face. Although we can't hear you, we do appreciate it. And in terms of questions, this is a discussion we're opening up to the field. So you as members can ask a question to me. Just make sure you forward your questions to Ivan. Ivan is my eyes and ears, and he will make sure that in the right time, he'll get the question to me. And don't be afraid, reactions. If you see something you like, if you want to give a round of applause, at the bottom on your control panel, you should see a tiny little reaction icon. Don't be afraid to give us a thumbs up or a round of applause. And on that note, I'm going to pass over to our president, Aditi.
Thanks, Pat. So, as Pat mentioned, my name's Aditi, and I have the absolute privilege of being CCA's president for this year. For a lot of you, this is your very first CCA event, so welcome. I just wanted to tell you a little bit about CCA before we get started with the discussion. We're Victoria's only IT and business student association, and we really want to deliver value to all of you. We do that through events like this, our publications team that does articles, newsletters, and our careers guide, as well as our incredible marketing team. So when I think of FinTech, I think of computing and commerce. It fit really naturally, and given all the changes in the Australian industry at this time, it felt like something that was an inevitable event that we had to run. And with that, I want to say thank you to Accenture, Deloitte, and Up Banking for providing us with a range of really great panelists. I can't wait to hear the discussion, and yeah, I know I'm going to enjoy it, so I really hope all of you will too. I'll pass it back over to Pat.
All right, thanks, Aditi. On that note, I'll just give a brief introduction of the panelists we have today. We have Hunter from Deloitte. He works a part of the digital financial transformation, and he's working on an ERP system, which I'm sure he'll talk about himself. We have Vivienne, a digital consultant at Accenture, and Xavier, the lead engineer at Up Banking. So I guess I'm going to now pass it over to Xavier. How would you like to open up and maybe give an introduction of yourself and maybe your experiences in FinTech?
Yeah, definitely. Hi, everyone. My name's Xavier. I'm currently working at Up, as Patrick mentioned. I'm software engineer and software engineering manager there on the leadership team. I've been there since last April, so for about a year. Prior to that, I've been in FinTech for about a decade. I started off at Cleargrain, a grains exchange, which was then acquired by the New Zealand Stock Exchange. So I worked there for a little while. And then for the last sort of 7 or 8 years, have been in San Francisco working at Square. Most recently there, I ran the payments, engineering and analytics groups at Square. So that's sort of my background in FinTech and what I'm doing here.
Perfect. Well, I'll pass over the question to Vivienne, and maybe you'd like to introduce yourself and tell us what got you into FinTech.
Yeah, absolutely. Thank you. So as what Patrick mentioned before, I'm working at Accenture. So I'm currently in the financial service banking practice strategy and consulting area. So before that, I was actually came from Hong Kong 10 years ago as an international student. And I graduated from Monash University, got my business degree, and then I worked at a bank for a few years. But I didn't quite really enjoy what I was doing. So I decided to sort of change my career in consulting. That's when I started working in technology. So what I like about FinTech is really about like integrating with technology to provide better financial service to your customer. And when I think about that, it's really about customer centric and lots of design thinking type of work involved. So I think this is very interesting and more like a creative part of me that I really like about fintech. So that's about me.
Cool. No worries. And of course, Hunter, maybe you'd like to just introduce yourself and maybe just tell us, what is fintech, or what does fintech mean to you?
Yeah, sure thing, mate. So as you said, my name's Hunter. I work at Deloitte in the digital finance technology team. So like I was alluded to before, I basically work in ERP systems. But what that really means is that I help businesses go from like one existing ERP system to another, which has a lot of different channels that are involved. I came through a different path, so unlike Vivienne and unlike sorry, I forgot your name. I actually started in advertising, so I was a business student at Monash, got my degree, and then I figured that looking at the outlook of the advertising industry, that there was a little bit of a lack of job security. So I went to go and do my own study on things that will probably be long-term, very viable for my career. I identified a few options, and fintech was definitely one of them. One thing that really led me to fintech was basically its I guess open-endedness and exploration in innovation. I guess the fact that there's a lot of unknown and you're really disrupting an industry that's been around for centuries. I found that really fascinating. And from there, I just self-taught, persisted, used a bit of what I got from university, but mostly what I taught myself, and then was able to land a job at Deloitte in digital finance technology.
Perfect. There you go. Well, there you go. 3 panelists' introduction and what they think about fintech. So I guess now on that note, I might move on to the first topic, which is open banking. And also to the audience, if you have in any section or any topics, if you have a question, feel free to message it to Ivan, who will forward it to me, and then I'll make sure I squeeze it in sometime during the conversation. But on that note, what is open banking and why is everyone talking about it now? I'd like to direct that question to maybe Hunter. We'll start with you.
Yeah, sure thing. So I think open banking, obviously, the new laws have been introduced around the world, and they're going to be introduced here, basically, where data is going to be available to third parties. And I think just in recent light of how data has been perceived by the public, I think it's got two elements. It's being spoken about by the public simply because there's a big issue with privacy all around the world. And I think it's got a lot of traction with businesses, in the sense that it's going to open a lot more opportunities for them, and they can see the tangible examples of how it will benefit them long term. So I think, they're probably the key things in terms of why open banking is being discussed about so much at the moment. I think a lot of it is because it's coming quick, it's unknown, and it often leads to a lot of different discussion points.
No, fair enough. And just on that open banking, the world in England, they adopted it maybe a few years ago, and the world is definitely pushing to sharing data and everything. Do you feel like Australia is a bit slow when it comes to open banking, or is it the fear of releasing data to the world?
I think it's the fear of releasing data to the world, especially with Cambridge Analytica and the scandal that happened with Facebook a couple of years ago, 2016, I think it was, and then how data is starting to get a negative light in terms of how it's influencing big decisions like elections and referendums. I think it's kind of the perception of data security is misguided. I think. I think there is a lot in place, and a lot has been done to maintain the security of people's data, but how the public perceive that is a little bit different. I think we are also slightly slow, but that's only because we just receive things later. It's like the same with everything. Like we receive movies later from the US. We receive everything a little later. So we're obviously going to adapt a bit later, but I think that might play to our advantage. We might be able to see the kinks in how it rolls out and potentially be able to mitigate any other risks that early adopters will take on.
Yeah, I totally agree. Just on that point, actually there is a survey conducted last year around how Australians perceive open banking. I think they held a survey with about 2 million Australian. Actually, almost 50% of them don't know what is open banking. So when you look at how the market actually perceives, it's not necessarily lots of people know what it is in Australia. So although it's one of the hot topic, but also when you think about why the market not necessarily know what is open banking, is it because the government not necessarily advertising a lot around this area? Or is it really because of data? Because essentially, if you think about bank, customer data, indeed, they take it very seriously. If you look at the news about bank, when they have like data leak around customer data, they definitely like receive very big consequences and fine. There's one happened, I think, last year in one of the major Australian bank, and I was actually part of one of the projects, and they take it very seriously when it comes to customer data. So it's not just because of open banking. I think in general, banks do need to think about how they can security customer data, and also think about the external and internal factor when it comes to security. So that's a really good question, Patrick.
Yeah, no, for sure. Open banking introduces a whole issue when it comes to privacy. So yeah, going into the future is going to be a big issue. I might open the floor to Xavier. I think you might have something to say.
Yeah, I feel like I have a slightly different take on it. I mean, I think there definitely is a public perception, or potentially a public perception issue. I'm not going to sort of comment on that. But I think there's an easier explanation, which is just the Big Four are dragging their feet. There's been a number of deadlines that have been put forward and then pushed back and pushed back and pushed back, mostly from lobbying from the Big Four. There's just not a lot of incentive for them to move. We've got a really powerful set of institutions here in Australia that have a lot of sway over this stuff. I think from a security perspective, any concerns there are really just FUD or misunderstanding. If you look at the state of the art today, it's people are giving their usernames and passwords to random third parties to like get loan approvals, and the state of security for customer data today in fintech is atrocious. If you look at what open banking and the consumer data right is actually trying to do, and if you look at what's come out of the specs and there, and this is where I think, sorry, I can't remember who mentioned, but somebody mentioned that we might be able to get the best of what we've seen in other countries. I think that is a pro. If you look at what they've put together as far as how it's actually protecting, it's giving consumers more control over their data than they have today. I think it's a really good framework, and it's a strict step up in security and privacy from what we have today. So I think there's definitely a public relations thing there that clearly has to happen. I think potentially rebranding to talk more about consumer data right rather than talking about open banking is probably a good start. But yeah, no, I don't think that any of the security related things are actually a reason why it's late. I think they're more excuses being put forward by the Big Four or the government for lack of action, perhaps.
Okay, yeah, fair enough. So if I understand right, you're arguing that open banking is actually more secure than what people are doing with the data now, or is it?
100%. Yeah, I mean, it sort of really spells out what it means to be a consumer data recipient, to be a consumer data provider, what controls you need to provide to the customers. It's all, as opposed to today, where it's just like, well, people are going to give usernames and passwords away, which is what we've been trying to convince people not to do for ages. Yeah. Now, so yeah, I think it's a definite step up. In the same way that sort of widespread adoption of OAuth has, I think, dramatically increased the security of other consumer applications. I see open banking and consumer data right as effectively doing the same thing for finance.
No, great answer. I guess I've got another question for Vivienne. I know you're interested in machine learning and data science. What opportunities do you see open banking presenting in that kind of data science field? Because now we have access to all this data information. What can we do with it?
I guess like open banking is like part of like data data in general is a big thing. Big data is a big term. So open banking could be a really good contribution in terms of data. But when you think about data, it really about different, like there are a few proportions. First one is to build a data foundation for a bank. So when you think about bank, they will generate a lot of data. It could be from machine, it could be from, it could be behavioral data. How can they really build that foundation so that they can go to the next stage, which is doing some analytic work, such as descriptive analytics. And then from there, how can they use AI, machine learning, to do more around prescriptive analytics? So obviously, based on the project I had previously at one of the bank, we are mainly dealing with machined data. So the process is definitely challenging because one, the client not necessarily knowing what they can do with the data, and two is lots of data, lots of raw data, and we need to make sure we actually structure the data. So there's a lot of opportunity around that because there's quite high demand in terms of really understand data and make use of it. So in terms of data type, machine data, and another one that I'm currently working, like a use case, is about behavioral data. It's not necessarily about banking. It's actually about how their employees behave. So it could be data generated from Outlook, for example. So from there, we can understand the employee behavior, and to understand, okay, why there is such a large disengagement result from the employee survey. So it's definitely a very big area, I would say, and like really high demand. So you don't really need to be a data scientist. You can also be a functional consultant in the area to really interpret that data into business content to help the company to drive some of the data-driven decision.
No, fair enough. Yeah. Yeah, so that's open banking for you. I guess I've just got a question here from one of the audience members. I might point this one to Hunter. What are the second order effects of open banking? Any low hanging fruit?
Low hanging fruit, I reckon. I think comparison websites are really going to be the winner here. There'll be a winner. I think they're just going to be, just like you saw with the redesign of the insurance industry. I think that'll be a repercussion to open banking that will probably be a little bit bigger than I think people first intended, because obviously you're going to have a multitude of new products that are provided by financial institutions, and there's got to be environments for those to be compared, and it's got to be better for the consumer. So I think there's going to be a real push for that. But yeah, I guess, Dave, do you have anything else you could comment on that one?
Yeah, I think what you mentioned there about it, what it does is it effectively makes it easier for people to build companies around people's financial data, and for people to get their financial to other companies. So there's sort of what I'm hoping effect of that is that it enables people to get more banking services such as credit that would be useful to them that they can't get today. It's generally quite easy to get a loan if you've got a very, very sort of normal profile at the moment. What open banking does, hopefully, is allows easier and cheaper underwriting of more types of people that sort of provides more financial services to more people that are more appropriate for their needs. So I think that's one of the potential upsides. The downside to that is you start, and we've actually already see this today, where you can end up with a bit of a panopticon sort of effect, similar to insurance companies requiring people to put GPS trackers on their cars. It's like, well, now everybody can always see all of your financial stuff all the time, or if they can't, then they may deny you service. Now, you're supposed to provide this data anyway, but what we see today is like we have people, I think we see a lot of this at Up because we don't actually have the ability, like you can't use the username and password to scrape Up. So we have a lot of people who are saying, hey, my loan company requires my bank username and password in order to underwrite me. How do I get it? And we're like, well, sorry, you can't, and that's not okay. But so that's kind of the potential downside if people now take this open data and say, okay, well, yeah, we need this connection. We need to see all your transactions in real time, and then it sort of almost becomes predatory. I think the risk of that is low particularly if you compare it to the potential upside of more people getting more appropriate financial services. But I think it's still something to be aware of.
Yeah, for sure.
Can I just comment on that? I think it's
Yeah,
interesting you say, like, obviously it's going to produce a lot more accountability for people and their data, just like you were saying with the insurance industry. It'd be interesting to see, like, is that a negative thing, and it means that people are less likely to get loans in certain areas, or does that mean that people are actually going to have to behave better and spend better, and people end up spending better, and there are less shady transactions? This is from a consumer perspective, obviously. Actually, it would still work. It would still work at a business perspective. So yeah, do you think? I think it will generally make people behave better if they're constantly being watched. But then, is there a moral issue with that?
Yeah, it's interesting, right? Like, I definitely think, like, you can sort of look to, for instance, the US to get some idea of what can happen here, where you get people like Lending Club, Square Capital, that are able to, using new sources of data and other sources of data, underwrite more transactions, and, you know, in the case of Square Capital, one I'm most familiar with, actually really help out small businesses in that case. And then, yeah, in the case of the auto insurance with the GPS trackers I mentioned before, there's definitely an interesting moral and ethical line there that, you know, I think as a society we're going to have to grapple with a little bit. And I'm actually not sure exactly how it's going to go, but I think it's going to be a net positive based on what we've seen in other countries.
Yeah. Well, we'll find out this year, I guess, once open banking is released. But actually, that you mentioned small businesses, that ties into the next kind of topic I have here. And the question is, this data could be seen as giving independence that of what banks offer. Is this a threat to big banks, or is it an opportunity for big banks to grow? And I might pass that over to Vivienne. We'll start.
That's a good question. I think definitely give big bank room to growth, to be honest, because if you think about it, in the past, I guess, I don't know, maybe 10 to 20 years, is really product-based driven rather than customer-based driven. So when they design financial product, it's more like the bank launch it because they think that we can probably, in terms of the strategy, they will earn more revenue by pushing that product rather than thinking about like customer-centric point of view. So now when it comes to open banking, we can share the data across, you can increase the competitive advantage because now people can really pick and choose the product that really tailor to them. Indeed, I think like obviously bank, they will need to really keep up on that. And second, obviously smaller bank will be able to catch up because I guess the infrastructure is slightly smaller. In terms of change will be a lot easier and faster. So bank really need to step up thinking about, okay, how can I do it in a more agile way? Say what I mean by agile is like a shorter term to really prototype our product, to making sure that we can push it to market a lot faster compared to a smaller bank. But again, obviously big bank will have challenge because when it comes to people, change technology, process is the larger scale. So it definitely a challenge for them. But in terms of like competitive point of view, I do see like neobank is more like I would say compromise what big bank but what big banks don't have right now. So if you look at, say, bank in Melbourne, like Judo Bank, for example, if you look at their funding, actually funded by Citibank. Like, correct me if I'm wrong, Xavier. So I know Up Bank, they're actually collaborating with Bendigo Bank. So really, like, it's actually compromised the product rather than they're competing each other with each other. So it's a challenge for big bank, but I do see they are more around like cooperating in the future rather than compete with each other.
Yeah, there's more benefit than probably a cost of this whole system. Well, just on that point, I might pass it to Zay. If you work for not a small bank, but one of those banks that is kind of capitalizing on digitalism, so maybe you'd like to comment on that.
Yeah, I think I'll be saying similar things to what Vivienne said. The way I think about, particularly as far as opportunities go here, one thing to think about is that open banking, in theory, one of the things it does is reduce the friction for changing providers, because you can either port your data or port relevant data over. Like, it should make it easier to switch banks if that's what people want to do. So that that would suggest that if it's easy to switch banks, then it's more likely that people will switch to a bank that they perceive as better than their current bank. And therefore it creates opportunities for banks that can stand out because it lowers the switching cost. So I think that opportunity is there for the taking for anybody, right? It's there for us at Up, it's there for any of the big banks. Anybody who feels like they have a standout product or service, in theory, this should lower the friction for people joining up and trying. So I think that's one way to think about whether this provides an opportunity or not. And then the other is that this potentially provides opportunities for more low-cost providers for financial services. Companies like Athena that are doing low-cost home loans. And what that means is that previously, in order to be a sort of financial services provider, you basically had to be a bank because that's how you ended up making all the money, right? So you're a bank, and then you could sort of offer everything, and the cost for anybody else to sort of come into your turf was kind of too high. Now we're seeing, and this is not just open banking, this is just the whole sort of fintech in general, is that we're sort of able to portion things up a little bit more, where we say, actually, we just do home loans, or we just do insurance, or we just do X, we just do Y, and those businesses require a lot smaller investment. And so that creates a lot of opportunities, potential opportunities, once again, either for small new players or for big banks that are able to sort of change, either do technology transformations or sponsor new sort of startups within the business kind of stuff.
I totally agree with the point as well, because like when I look at Judo Bank, for example, is one of the neobank in Australia. So they target a niche market. They target this small, medium enterprise market, which has a pretty big gap right now in the banking industry. Because if you think about big bank, they can't really, if you think about big bank in terms of commercial lending, you have business banking, which is like large amount of access, or you have like retail banking, which is small. If you think about your small, medium enterprise customer, you're opening a candle shop, you only have like 1 million assets, and you come to a big bank, you may only apply like a retail loan rather than like a business banking loan. So really, neobank can actually identify that opportunity and really help embrace that market and really tailor the product for their small, medium price customer. So this is a really good point as well, just to add on that.
Yeah.
Fair enough, yeah. Now I've got a question from, it might be a bit of a controversial one, but I have a question from Alexander. He's asking, aren't all the banks backed and owned by bigger banks? How would you like to answer that? Maybe Hunter.
Yeah, from what all the neobanks, from what I've read, most of them, I wouldn't know of one that isn't backed by a bigger bank. But I think the
Vault and Xavier probably.
Sorry?
Vault and Xavier.
Oh, I haven't heard of that. So there you go.
And then 86-400, debatable.
Yeah, okay.
But
I
they're
don't
probably
think
the main ones.
Yeah.
I'd say like, and what we're asking for the complication of there being neobanks emerging or rising, and they're backed by bigger banks. I just think it'll mean that I don't think there's any real complication there. What it's doing is picking up the new wave of bankers, because effectively, like, we've got a new environment that's online. This is practically our Dolomites, I see. So you have banks that are taking advantage of a changing environment, and they're effectively getting I guess, stake in the companies that are looking to pick up Gen X and Gen Z in the future. I think this will have I think by them backing the neobanks coming through, it's a way for them to kind of just stay, grab a hold of the new trend. So I guess that's pretty much my take on that.
So almost in a way, it's kind of how the big banks can stay the big banks.
I think so. I think in 10 years it'll be a real shift in the landscape. I think the fact that, because effectively, give it 20 years and the wealth will be with our generation. the people that aren't tech savvy will unfortunately no longer be around. And I think there'll be a real shift in who gets stake in this consumer, I guess the tech savvy consumer group.
Yeah.
Thoughts on that, anyone else?
Xavier, would you
Yeah,
like
I think my answer to that question is about aren't all banks just owned by bigger banks? I think the reason that banking in Australia is really excited at the moment is because for the first time in a very long time, that's actually not true. So there's been a couple of drivers for that. You've seen APRA, who's the regulatory body, came out with what's called the restricted license, which is effectively a much easier on-ramp to get a banking license. So this is the first time that APRA's been granting licenses in, I think it's 20 plus years. And so you've got Volt and Xinja are two, 86400 is another, who are doing the restricted ADI route. Then you've got Up, I think is a good example of a different model where Up is not owned by Bendigo Bank. Up is, Ferocia is a company that builds Up, and they work with Bendigo Bank. So Bendigo Bank is sort of providing the wholesale, providing the regulated financial product, but then Ferocia is doing all the sort of marketing and product development and all that sort of thing. So it's, you know, it's sort of a halfway thing where yes, there is a one of the larger banks still involved, but they don't sort of have that ownership drive over it. So yeah, I think now, is this going to work out? Maybe all these banks will get bought by bigger banks. Who knows? But I think at the moment, at this point in time in Australia, it's actually quite an exciting time.
Yeah, for sure. Now, just backtracking in the chat a bit, there's another question for you, Xavier. It says, do you see companies like Up and Square offering SME loan services? Does it change the unit economics of getting a loan?
It 100% does. So in the case of Up, I mean, Up's more of a consumer brand, so I wouldn't expect to see that anytime soon. But I mean, Square's been doing this in the States for 5 years with Square Capital. They've issued billions of dollars in SME loans to both Square merchants and also other merchants. It's actually an independent, it can do loans independently of Square. And the reason they were able to do that is because, of changing the unit economics of getting a loan. They were able to bring machine learning, bring some new data, bring a really tech-focused way of underwriting people that did enable them to offer competitive loans to businesses. It's sort of like these businesses weren't going to get a loan anywhere else. They can get a loan with Square, and it actually helps them grow their business. It's good for everybody. So I don't think they've brought that to Australia yet, but you know, there's no reason they shouldn't strategically, I don't think.
Yeah, for sure. And maybe I might just stay on you for this question as well. What are the advantages and disadvantages of a product and mobile-first approach to banking?
I'm probably a bit biased because I don't really know what the disadvantages are. Like this is how I build things. It's you focus on, if you have this really strong engineering, if you bring sort of the tech-led bit to it, you can reduce your costs quite significantly over how over how a lot of traditional businesses have been built, where they have a lot of humans doing a lot of manual processes. You can just undercut costs there pretty significantly. From a product perspective, you can sort of have this radical focus on what is the customer experience, and then we'll make the rest work, as opposed to what are we going to sell these people, and then going at it from that way. So I think the advantage with this tech and product first approach to banking, once again, I think I'm biased, but I think you can see this in Up. You know, we've got a banking app that's rated 4.8 on both of the app stores. We've got customers raving about us. We have people who are actually going through this interesting thing. They're like, I never thought I would be excited about my bank. I never thought I would love my bank. I never thought I'd be looking forward to the release notes from my bank. And that sort of customer loyalty and that building a brand, it's really hard to do if you don't have that tech-led and product-first approach, particularly now that all of our products are, on a mobile device or on a computer. If you go back 50 years, that wasn't true. You had other avenues of building customer loyalty or now, but today, like if your product sucks, good luck, So I really think that, if you're not taking this product first approach to banking, or actually, frankly, any industry at this point, you probably want to be thinking about it pretty quick.
Yeah, for sure. Maybe you want to have a few words on that, Hunter? Maybe disadvantages, if you can think of any.
I think so. From a product first approach, I think actually a good example is maybe that is for consumers. I think you hit the money on the head, hit the nail on the head, Xavier. But I think sometimes in business, like especially what I see implementing Workday, like Workday is traditionally an human capital system, so it's a very different user interface to what accountants are normally used to. And we get a lot of backlash implementing it with accountants because they don't trust it. They think it's like the Facebook of accounting, and they don't think, because it's not basically in Excel spreadsheets and because it's not in a SAP format or an Oracle format, they don't really trust it. So we've had a lot of issues kind of getting that change across, and how data's, I guess, presented differently and a little bit more, I guess, for lack of a better term, playfully to the end user. The end user being someone that is a normal employee, and you know what? They may, when they jump out of their job and they go into their online banking, they may want a good product that actually assimilates to their personal online environment. So yeah, I think there's just different approaches and different considerations you have to take, but I think Xavier pretty much nailed it.
Yeah, I mean, I think that's pretty perceptive. I would see that as a challenge, but I mean, Workday is still crushing it as a company.
Oh, 100%. Yeah,
like
completely agree. But like, if I was to just play devil's advocate and find one.
Oh yeah, no, I agree with you about that's definitely a challenge.
Yeah.
Sure.
Yeah, for sure.
Yeah, when it comes to products first approach as well, because currently I'm working on a project with Encino, so it's a loan originating system. So how that product actually come up originally is actually a group of banker in the state. They realized, okay, I need a system to originate my loan, but at that time there's no product available to actually do that. So what they've done is they customize they customize and build that product by themselves, and they realize, actually, you know what, there's so much potential around the origination system in commercial lending. So they started actually package the product and decided to sell it to other banks. So it's huge in America, and from what I heard, like right now they're rolling out in Australia as well. So now they package as a product rather than evolving to a product right now. So I think like one of the disadvantage will be like we do have like client one unicorn and one more customizations around this product. So it's really taking a balance in terms of how we're designing the product and able to feed it back to the vendor to improve the product in the long term. Yeah.
Yeah, no, fair enough. Now, just to finish off the data science element of fintech, I might ask you, Vivienne, we talked about the data benefits for big banks, but for neobanks, is data science an obstacle? Because normally with data science, it requires a lot of big systems, a lot of big manipulations. What are the benefits and costs? Do neobanks benefit from it, or is there a kind of curve where they need to be big enough to benefit from it?
So I don't think it's really about the size of the bank. It's really about so obviously, like in terms of data science, if you think about big data, there are 4V. I forgot another 2V, but I remember one is volume and velocity, and also I think the third one is around the accuracy of the data. So if you think about Xavier, if you have anything you would like to add, I don't know how data generate within like neobank, like what's the data foundation that they have right now, but obviously in comparison to big bank, they have a lot more system in terms of generating machine data, for example, in comparison to neobank. So I would say indeed the data base, like the volume that they produce the data will be slightly less than traditional bank. So, but I don't think it's a challenge, because essentially when you think about data-driven banking, they will still need to accumulate the historical data to find out the pattern and drive some of the decision. So I don't think the size really matter. I think it's more like how they can store the data, how much data they have, and how they're gonna take value from that data. And that's really the key. So you will need to have a data science to really understand what's the value of the data. And from the cost implication of that, is that if you think about big bank, yes, they can generate lots of data, but it costs a lot of money to even store that amount of data. So it really depends. I don't really see that's the challenge. Yeah.
Yeah, I'd agree with that. I think the for doing this sort of machine learning stuff, a lot of the time the problem, particularly in big enterprises, is really getting the data in the first place. Like if you've got a clean aggregated set of data, then the machine learning and visualization on top of that's pretty straightforward. But getting that data in the first place and sort of aggregating it and storing it and having a platform that you can work with it, that's the hard problem in a lot of these cases. So to the extent that any of the open banking can help as far as, at least as a standardized way of receiving information from other companies, I think, yeah, that can help. But as far as who can take advantage of it, it's really, who's in a position already to already have systems in place for, as Vivienne talked about, storing data, processing data, aggregating it, cleaning it, all that sort of stuff.
Yeah.
And like to that, Dave, I think the big banks have a lot of work to do to actually clean up their existing data. They weren't thoughtful when they were originally taking it. So, and I think that's probably a massive competitive advantage for the neobanks. You'd agree, yeah?
Yeah, definitely. And the other thing that the other banks, one of the challenges that they have is if you ever bought another bank, then there's a huge data integrity problem right there. And most of these big banks have bought multiple banks. So just from the nature of their, rather than sort of one bank, they've got 20 banks that will need to integrate all the data between. It's very tricky.
Yeah, no, fair enough. And just to finish off on neobanks, I guess right now we're going through a time, you can see we're all on Zoom, everyone's working from home. What's the toll on neobanks or even big banks right now? And is there any benefits or any gains either side are getting from what's happening in the world right now? Let's go with Hunter. How would you like to answer that?
Well, funnily enough, my housemate works for NAB, and she was showing me something that probably shouldn't have been showed to me, but basically they've had a massive spike in transaction accounts that have been opened. So in terms of like the uncertainty of what's going on now, and I think that's the key thing, it's the uncertainty, and that's what's driving a lot of people's behavior. I think that's causing a lot of people to try and find security. So they'd be doing that in cash accounts. And I guess, the people that are really uncertain will be older people, and they'll be doing what they know, and they'll be going towards the banks that they trust and that they have brand affinity with. So that's like something that I can comment on, but I imagine Zave would probably see something a little bit more upfront in the effects that it has on neobanks. So.
Yeah, fair. How'd you like to?
Sorry.
Go ahead, yeah.
Yeah, so I think one thing we've seen, just from a logistics point of view, like a lot of the neobanks are kind of already set up to have people working from home. Like a lot of them already have people working from home a day or two a week. All their systems are built with the idea that people are going to be working from home. And that just comes from their background in, as technology companies, that's kind of a par for the course these days. So to the extent that any of the existing players have logistics in place, or have they had their entire workforce work from home before? Probably not. So the ability with which that they're able to respond to that, and there's a lot of like things like, do you have a corporate Zoom account set up? Does it work over your VPN? Do you have access to all of the mainframe systems that you need remotely in order to do the authorizations you need to keep the bank running? And like all these sort of like what sound like really mundane things that sort of become an issue when you realize, well, actually, someone's always been at the office. So I think that's where just, Hunter was talking more about, the effect on sort of the business. But if you think about like the employees and their ability to work through it, I think everybody will adapt. But I think the Neo's definitely got a bit of a leg up. They've also got smaller workforces, so that just makes it easier as well. It's a very different proposition to migrate 50 people to work from home than it is to migrate 5,000.
Yeah, Zav, just to add that, sorry, Vivienne. Yeah, just touching on my housemate. Basically, I overhear countless examples of where her having to work from home has just been a massive nuisance for them. And there's still instances where if certain scenarios play out, someone has to go into the office. They're waiting in IT for certain software to be installed on their computer. All sorts of things. So then they weren't prepared. And yeah, you're right. Like neobanks, obviously a lot more prepared and a lot smaller workforce. So definitely one more poised.
Yeah, absolutely agree with that, because currently I'm working on a project with a neobank. So the setup is very easy. We can definitely work from home. And actually, we are going to have the next phase really soon. Whereas I have a friend working at one of the big bank. They have a department that never worked from home before because they need to be at a bank to deal with some issue. So it's really hard for those people to really set up their privacy network at home. So I do see like it's more of an advantage for neobanks in this situation.
Yeah, no, fair enough.
That just reminded me of a story we were telling in the breakout room before. So one of the things we can do with a small workforce is because a lot of people like to work at home. As everybody would know, you'd need like a desk. Like it sucks to be working on your couch or whatever. So it's very easy for us to say, well, everybody just take your monitor home. Take a keyboard, take a mouse, take a monitor, whatever you need. You need a chair, we'll buy you a chair. Easy. Like that's the thing that we can sort of do. It's a much different prospect at a 5,000 person company to try and sort of manage the logistics of that.
Yeah, of course. That flexibility of a small bank can sometimes be very advantageous. Just in the interest of time, I think we'll move on to one more question. It'll be a very interesting one to see your answers to. And then we'll open it to the floor. I could see a few questions coming through. So if anyone has questions around any topic of fintech, please feel free to send them through. But the question I'm asking, and I'll get everyone's opinion on this, Bitcoin, is it a hoax or is it the future of the financial system? And I might start off with, let's go with Vivienne.
That's a good question. I'm a bit biased on that. In fact, funny thing, when I just graduated, I actually had 3 weeks of internship experience at one of the Bitcoin company. So I had a really, I would say, not necessarily a positive thing about Bitcoin, but what I like about, in fact, not Bitcoin, but more like underlying technology is the blockchain, because blockchain is really about storing the information like data to making sure more transparent and also accurate, and also reduce the cost for company to use blockchain technology. So I do see blockchain could potentially grow in the future. I know, for example, ASX, if you check the news, they're using blockchain technology. So I think it's the first case in Australia as well, but it's definitely challenging because it's a complex technology, and also I believe it have some like regulatory implication, and they also have some implementation challenge, because I don't think at the moment there are a lot of people have the blockchain knowledge. But in terms of Bitcoin, I don't really see that as an asset. I personally don't really invest in Bitcoin. I rather invest other things. So I personally, because it's not necessarily centralized currency, to be honest, I especially think about right now, like this environment, will people purchase Bitcoin in this uncertainty environment? I don't know. I like, so for me, I'm not necessarily having like really positive thing about Bitcoin. So that's my opinion. I'll leave it to that.
No, that's a good one. Yeah, maybe Hunter, what's your opinion on Bitcoin?
Bitcoin itself, I would rather more focus on things like cryptocurrency. I think cryptocurrency is a tricky one, because I think it had a chance to kind of make an impact, and then it had a really, really tough time a couple of years ago. And I think it will take a lot to recover from that. I think what we might see though, in terms of online currency, is something in the form of what WeChat have in China. I think like social social networking platforms. I think Facebook will soon, maybe in the next 5 years, will introduce something to rival what WeChat have. And I think that'll raise a lot of different issues. They already tried with Libra, and I think there were some issues there with how they valued the asset, but that's something that we'll definitely see. Touching on what Vivienne said in terms of blockchain, I think that's got a lot of, that'll have a lot of movement in the next few years. Deloitte are doing plenty in terms of ag business. I think they're also in insurance, they're using it. So they're definitely pushing it, and there's a lot of different use cases that you can find on that. And then from a particular like finance function perspective, I think, yeah, like a distributed ledger will obviously relieve significant friction in like inventory management, asset management, and then will also definitely increase the speed of reporting. And, you know, to be fair, it'll probably have a really massive impact on open banking. And I think the two will coincide really well. There's a lot of, I guess, security and authentication and stuff like that, which is where blockchain really thrives. But yeah, I think that's where it'll probably have the biggest impact.
Yeah, fair enough. And maybe Zev, did you want to say maybe a few words on this?
Yeah, so the way I look at Bitcoin and blockchain more generally is that it's a pretty neat solution. But the problem with it is if you do a decentralized system, it's going to be more expensive than a well-run centralized system, just sort of based on how the whole thing works. And so that means that if you're in an industry where there's a centralized party that everybody can trust, then the blockchain solutions are going to lose over the long term because they just won't have the same economics. And I think Bitcoin is actually a really good example of this, where you know, it sounds good. Oh, yeah, okay, you don't need to trust anybody, but then when you lose your wallet or your exchange gets hacked, if you lose your wallet, usually you just go to your bank and be like, "Hey, bank, sorry, I lost my password. Can you fix it for me?" Turns out people actually want that. That's a thing that most people, most of the time, when it comes down to it, that's a feature that they really want. They actually would prefer to trust their bank because, you know, taking on all of that risk yourself of having to manage your keys and manage your privacy, like, it's actually kind of sucks. It's a lot of work. And so I think there's just some sort of fundamental reasons there where blockchain has been trying to use in a lot of places where actually it's not really appropriate. Now, there are some cases, you know, if we're talking about potentially like between country settlement, that sort of stuff between banks, maybe there's some blockchain stuff going on there, maybe, but I think the set of problems for which the solution is appropriate is far smaller than most people tend to think. That's the first point I'll make about sort of blockchain types of solutions. I think Bitcoin itself, yeah, it's solving a problem. Like it's also one of those things where if it ever did become popular, like there are just so many technical issues, from the huge environmental cost of the current proof of work stuff is just frankly quite immoral, I think. Now, yeah, there are some solutions for doing proof of stake and whatever, but you know, that's not how Bitcoin works today. So that needs to be fixed. The transaction processing speed is just not up to scratch, and even things like the Lightning Network still haven't quite proven themselves out. But then, even if it did become popular, if it becomes a threat to a national currency, then the government can just make it illegal. It's kind of what China did. And so it's it can never be popular just based on how it would work. So yeah, a bit of a skeptic there. Hopefully, as both Hunter and Vivienne said, I think there are some good niche applications for blockchain technologies. I think we'll find them. I think as far as using it for currency, as long as we have national governments, I think it's pretty unlikely.
Yeah, no, fair enough. Well, that brings us to the end of my questions. I'm going to look at a few questions from the audience now. I can see there's one question for Vivienne. What was the transition like from working at a bank to Accenture? Was there any crossovers in your experience as a banker to now as a consultant? What was the greatest challenge in the transition?
Yeah, that's a good question. I think, so first of all, let me just share my experience at Morgan Stanley. So I work in Morgan Stanley in operation area. So that area is around dealing with our client trading account, monitor the trading account. So the net worth is about 1 to 5 million, up to 1 to 5 million. So it's a very, I would say, repetitive work. So I pretty much, what I found is I've learned everything in 6 months. However, at that time, because I was an international student, I was obviously trying to get my permanent residency in here. So let me just stay there for a while and see what I can do, what I can learn outside of this job. At that time, initially, I was trying to go to work a lot earlier and try to help other department to do their work as well, so that I can gain the knowledge in other operation area. But I get to a point where, you know what, let me try to see anything that I can do more outside of operation. So that's when I noticed trying to think about, okay, what I can improve in this team. And then I tap into process improvement. You can just start something small, like, can I understand what is what can I do to improve the team efficiency, for example? So if you think about consulting, it's actually part of change. So that's when I started putting myself into consulting. And I know a person, which is a friend of my friend, actually a consultant as well. So I talked to him about, oh, what is consulting? And he talked about like implementation, delivery, discovery. At that time, I don't know what it is. You know, it's like very high level terminology. I have no idea what they mean by implementation. So that's when I started actually do some self-learning, understand, okay, what is change? And then if I want to get into consulting, let me just go online and check what are the requirements to be a consultant. So when you look at, for example, change management, they may say require Six Sigma like certification. So then I will start searching what is Six Sigma certification. Like right now, I think it's really good to have so much resource online that you can do self-learning to try it out by yourself and see, okay, do I actually like that? Maybe I don't think I like it. Maybe I just tap into other area. So right now, like especially like early career, it's always good to keep learning, to find out what you don't like to do and try to avoid it, which what I did at the start, and then try to prepare yourself and see what you can do in your current role to gain that skill set, and then put that on your resume to find your next job. That's one thing. And the second thing is network. So at that time when I was a grad, when I think about networking, it's sort of like thinking about begging people for a job. But now I just think that it's just good to build relationship with people, because at the end of the day, even though not consulting, even though just normal thing, it's always good to be relationship. Just not necessarily you need to be fake or anything like that, but just to know the person, know what they do. From there, you can gain knowledge. You don't have to be like if you study finance, you don't have to be you don't have to be a banker if you don't want to. You really it is okay to change your direction if you want to, and try to think about what you can do around it. So the second thing I would do is network. Try to talk to people that your age. Try to talk to people that about your age, just to get the point of view, get the advice. So I think that's two things. And a third thing is, I would say, just back to the question, the last question was around what's the biggest gain being consultant. I think that's the question.
I think it was
the biggest.
What was the greatest challenge in the transition?
Yeah, the transition challenge is that because working in operation, because I repetitively doing the same thing every day, you get a consulting is different. So different as in the cultures are different. In consulting, people challenge your point of view, whereas in operation, people are not going to challenge you. They will just listen and then do whatever. The second thing is really need to think about, is there a better way to do this process? So in operation, because you follow the process, you would think that, okay, yeah, I follow the process, take, that's okay. But in consulting, you think about, okay, so in this process, can we simplify this whole thing? Instead of making it 5 steps, can we make it to 3 steps? Can we make it easier to do? Can we actually free up some time to do other things? What are the value to do all this thing? So it's like different thinking. So I would say the transitions are those two.
Yeah, no, fair enough. Hunter, I might ask you the same, maybe rephrase that question as well, because I know you mentioned before you came from a business degree and you went into technology. So maybe you could tell us what advice do you have for young people interested in maybe going into fintech from a non-technical background?
Yeah, certainly. I think one thing that I found myself really honing in on was being able to teach myself how to learn, and learn on the spot and learn quick. I think, and then to extend on that, there's nothing that you can't do. So you can teach yourself. You can teach yourself how to maybe not become an expert, but at least be able to hold your own in certain situations. And I think, especially being a consultant, and Vivienne alluded to this, it's very much about trying to problem solve and find and redesign what the client is currently thinking. So yeah, I think in terms of coming from a non-technical background and working as a technology consultant, it's about being open-minded, not being scared of things that you don't know, and then really working on when you are put in situations where you have to learn something new, figure out how you did it, and then really refine that skill and refine those steps and understand how you pick up on things quicker so you can do it next time.
Yeah, no, fair
Just
enough.
to add on that, I don't know if Hunter have any situation where people throw in a deep end and you need to figure it out. It happens to be like a few times on a project where the manager probably just let you run the meeting with the client and you have absolutely zero knowledge about it. So how can you pick up the topic really fast and able to drive the conversation?
Yeah, the other thing with that, Vivienne, is also being able to understanding that you're not always the expert and that you know where the answer is, and problem solving doesn't necessarily mean you revealing the answer then and there. You don't have to know the answer straight away. Would you agree?
Yeah, absolutely. And consulting in general is really ask the right question. So for example, if you don't know about something, instead of say, what is this? Maybe you rephrase it like, let's say agile methodology. Instead of asking, what is agile methodology? You will rephrase it as, okay, so how does agile methodology impact the company? Is there any example that you can give me? It's actually the same. They probably kind of give you the exact same answer, but you just rephrase the question a little bit more and sounds smarter, I would say.
Yeah, well, there you go. And for all those young career people looking to go into fintech, there's a bit of advice for you from non-technical backgrounds. All right, so I've got another question here. It relates to Google's GPay. I might point this one at you, Xavier. Google relaunched GPay in 2018, and WhatsApp now has in-chat payment features. What are your thoughts on large companies like FAANG diving into fintech? Is it their place to do so, or should they leave it to banks and other organizations?
Yeah, that's an interesting question, because as far as I haven't really thought about should they or shouldn't they. I kind of feel like banks tend to have fairly low consumer. Well, actually, to say banks have low consumer trust isn't quite accurate. But companies like Apple tend to have really high consumer trust. And so for Apple to say, you know what, actually we're going to try and use this and try and do some fintech play, I'm kind of like, well, sure, they're still following all the same regulations and all that apply to others. So morally, I don't see a problem with it. As far as my thoughts on them doing it, I mean, there's potential value to be created from their perspective. Although I think it's one interesting thing that we saw with Square Cash was because as you say, Google had to relaunch GPay. There's been a number of different you have a Messenger app and now you can send money via the Messenger app. And for some reason, it just turned out that now people are socializing and it makes sense for them to have a separate app to send money. I'm not 100% sure why, but that's just one of the things we noticed. So whether they can be successful, I don't know. We'll see. But there's definitely there's money in money, so I can kind of see why they're all doing it.
Yeah, jumping on that boat. Yeah, no, fair enough. So I've got another question here. It relates to the financial crisis coming up as well. Maybe Hunter, you'd like to answer this one. What are the implications of the upcoming financial crisis on neobanks, given that businesses will be short squeezed? Their business models, for example.
Maybe not neobanks, but just from what I know, from banking in general, they're probably going to take a seriously significant hit. Obviously it's unprecedented. It's unlike the last global financial crisis where there was a little bit of disdain in the air. Everyone's a lot more helpful, and I think the industry that will probably get hit the most will be the banks, because they'll just have to bail. They'll have to be much more lenient on their customers, in particular small businesses, and I think that's probably the impact it'll have. But I guess from a neobank perspective, Zave, do you have anything that's a little bit more specific to that?
Yeah, so the main way that this would impact neobanks would actually be on their funding. So none of these neobanks are profitable businesses at the moment. You can just figure that out by multiplying out their salaries by the number of customers and realizing that there's absolutely no way that they could be turning a profit. And that's expected, right? All these companies raise capital. The idea is that they're in growth phase for a while, they grow, and then they transition to a profitable business later. That's just like standard venture capital stuff. So specifically, do they have enough cash in the bank? Because if their growth takes a hit, which it may or may not, I think Hundy said maybe NAB might be seeing a growth. So, either way. But if growth slows down, then that's going to affect their burn rates and affect what their the outlook on their business. It could affect their ability to raise capital. And so then it really depends. Well, do they have the funding sorted? I think long term it doesn't really affect their business models, because the idea is that, well, hopefully everything recovers. So it's really more, can they get through it before they go out of business? Now, if you look, I'm not familiar with all of them, but I think most have actually either secured recently or have announced that they've secured relatively large tens of millions of dollars in capital. So hopefully they've done the math on that and it'll see them through.
Yeah,
I agree. I think in terms of implication for neobank, I actually think that neobank probably managed that a bit better, because if you take like Judo as an example, because they are focusing the SME market. So in terms of doing the financial analysis on the customer, would really tailor what the customer need. Obviously, right now at this stage is an extreme situation, but say if a customer probably having a business near the bushfire area, for example, say they will have a financial analysis, take that as one of the risks in terms when they actually assessing the client information. So I actually think that the bank potentially have better buffer in terms of when it comes to the customer having risk in this kind of situation, rather than saying that they want out of money or anything like that, because they're able to assess the customer a bit better, because they probably have a one-on-one banker to handle one SME client.
Yeah, no, fair enough. I might keep on you, Vivienne, just for this question as well. Currently, there are companies striving to stimulate the untraceable nature of cash payments digitally, like Squarespace Cash App, whilst others are trying to make sure you can always see one's transaction history. Which way is better, or is there a better way?
Untraceable nature of cash payment versus
I think what
traceable
they're saying,
transaction history.
Traced or untraceable? Which way is probably better? Is there a better one?
In that case, my question will be, depending what company. So if you talk about, say, just previously, Google launched GPay, for example, will I be comfortable for them to trace my transaction? What they're going to do with my transaction data? Would they use the data to sort of help me, to sort of help them to come up some other advertisement related to my transaction? Then me as a customer, I will be concerned about that. But if it's like bank, for example, for me personally, I'm pretty comfortable to having my bank to see my transaction details. In fact, if you look at some survey from last year conducted in Australia, I think about more than 50% of the people actually comfortable to share the transaction data with their with their own bank. So it's really depending what company that's trying to trace my cash payment. So if it's like a regulatory body, I actually, like for me, I think there's not a problem. But if it's something that not necessarily regulatory tied to the, I guess, business activity, then I will be concerned whether my transaction is not traceable. So it really depends, in my opinion.
Yeah. Did you have something to say on that, Xavier?
Yeah, I mean, I think I'd start by debating the question a little bit. I don't think characterizing Square's Cash app as trying to simulate untraceableness of cash. I mean, I guess it's called cash, so there's a bit of sleight of hand going on there. But actually, no, like it's a digital payment. There's strong authentication on both sides of both who you are and who you're sending to, and there's a sort of a web of payments that gets tracked there, and that's true of all the digital payments. So there's a definite trend across the globe towards traceability of payments and sort of eliminating, or not eliminating, reducing the role of cash in the economy. And you know, a lot of people have very strong opinions on this, but I tend to think that's a really good thing. The cost to the financial system, the cost to normal people of untraceable money is huge. Like the amount of untracked money that causes tax evasion or relates to tax evasion, drug money, that sort of stuff, it's trillions of dollars worldwide. And this is just a tax on everybody else. So I think the more we can push towards traceability of payments, I think anti-money laundering stuff like that is really important. You see countries like India abolishing their high-value notes, and there's other countries that have been looking to do that as well. I think we're pretty quickly moving away from cash. The cost of cash is really high. We saw this as well with Square, where a lot of businesses were moving away from cash because it was actually expensive for them. Because with cash, you know, you have to go to the bank to make sure you've got change. You have to deal with employee theft a lot more. A lot of companies were just saying, no, it's actually cheaper for us to just use cards, even take into account the transaction processing costs on cards. So yeah, yes, there are some downsides moving away from cash. You know, particularly when you have a country where, sorry, I don't know the Australian stats, but in America, half the country is underbanked. So if you're underbanked and you don't have access to debit cards and the like, you kind of need cash. So, you know, it sort of needs, we can't just get rid of cash without thinking about, well, what happens to people who currently rely on it. It's not that easy. So it's no, you know, it's definitely a hard problem, but I think the trend away from untraceability of cash is an unmitigated good thing.
Yeah, no, fair enough.
Hunter, did you have any thoughts on that?
I agree with you in terms of traceability, and probably on even just to touch on something that Vivienne said. I think like how third party or how banks even use that data. You were saying if it was to deliver you an ad, for example, wouldn't you want what is relevant to you in front of you when you need it? I think what the banks do in terms of how they use data, and people may see it. We may see it as a negative thing, but what they're just trying to do is personalize things for you. So having traceable nature of cash payments is huge, and it allows you to basically have a bespoke environment where you can bank. So, and you see that in all your banking apps. You'll see it in the analysis. Like I even know on my CommBank app, like the analysis of where I spend on even in my Raise and my Beam It app. Yeah, they basically cater to certain things for you, and it makes it personable, and that's what you want. So I think traceable is definitely the way to go. And also, just I think you very much spot on, Xavier, in the fact that untraceable payments is a huge burden on society.
Yeah, there you go. Just in the light of time, I have 2 more questions, and then we might wrap it up after that. But I'll stick on you, Hunter, with this question. How do independent banks like Volt and Ninja compete in the banking space without the financial backing of a larger bank?
How do they compete? It's through their products. It's through how they reach their customer. I think building a strong customer base early on, despite all banks started out small. Or, you don't have to survive with the backing of a big bank. It's just going to take longer. It's going to have to be smarter, and you're just going to have to make sure that it's a product-led, it's a product-led design and a data-driven design. So I think, yeah, it's definitely doable, and it's going to happen more and more. So I think, yeah, it's basically, it's how you reach your customers and how you build that brand affinity, because that's what the big banks have over the little banks, really. It's like the cash, but also the brand affinity. But long term, I think you don't really need a big bank to be backing you in order to succeed in the banking industry, and open banking will allow for that as well.
Yeah, I probably realize, Xavier, you probably have a really good answer for this question.
I really like that. That was a good answer. I really like that.
Yeah.
The only thing I would add on top of that is there was some interesting stuff. Historically, the way you make money as a bank is you get people's deposits and then you lend it out to people, and then you make money on the spread. That's sort of been the primary way that banks have made money forever. And with the interest rate as low as it is in this sort of low interest rate environment, if we go anything like the States, which has had, effectively 0% interest rates for years, it compresses that spread and means that banks can make a lot less money from that typical way. So what that means for the neobanks is, either they would have had to build up a loan book to support their deposits or sell it out to somebody else to loan for them. Or they'll have to look at other ways of making money. Could be, like account fees or extra financial services products, or any one of a number of different ways that you can make money. But I think they're going to struggle to make money off the typical way that banks made. But that's probably an opportunity. Coming in with a new low cost model sort of makes sense to rethink the revenue model as well.
Yeah, no, definitely.
But yeah, it's still sorry to roll on, but I think it's still an open question as to whether they can compete. All the neobanks at the moment are still sort of trying to get a foothold, and like Xavier just had to freeze new accounts for their saver product a month or two back. The RBA has cut the interest rate 3 or 4 times in the last 6 to 12 months, and so yeah, I guess we'll see whether they can. I hope they can. I think it's good for the industry if we have sort of more up and coming banks around in Australia.
Yeah, no, for sure. That competition type thing. Okay, that brings us to our very last question. Which do you think is going to be the biggest area for growth in fintech field in the future, AI or cyber security? How would you like to answer that, Vivienne?
Definitely biggest area for growth, I would say cybersecurity. Just because AI is already growing, but if you think about cybersecurity, it's not, as I mentioned previously, not necessarily just about like security in general. It's external and also internal. How can you making sure that internal your people are compliant, and then also external, how can you avoid the external attack like fraudulent activity? So that area, what I noticed is, for example, like the previous project I was working on in a big bank, they really invest a lot of money in security around data. So I see a lot of growth in cybersecurity, but I'm not necessarily saying that AI is not growing, but just that they really need to compromise each other and able to provide a secure environment for their consumer when it comes to banking. Yeah, that's my answer.
No, that's a good answer. Maybe Hunter, you'd like to maybe give an internal answer to this. I know you work with ERPs, which are used by businesses. AI, cybersecurity, which one will probably grow the most?
I'd say cybersecurity, simply because it's always growing. And the reason it's always growing is because there's always people hacking. And there's always finding a way around it. So it's always going to be there. Both big projects that I've worked on, they've had significant elements to it that were revolved around cybersecurity. Workday have even introduced data scrambling into their functionality. So they're already like getting on the front foot and trying to get away from having third parties implement their data scrambling technology, integrating it into Workday. But yeah, not to say that there's a massive market for cybersecurity, and cybersecurity consultants as well. there's a massive demand. So yeah, I think if I was to pick one of the two, I'd definitely say cybersecurity.
Yeah, for sure. Yeah. Xavier, did you want to say maybe something, or?
I'm just going to cop out and say both.
Yeah. Okay.
I do think I'd probably quibble. I think like if you replace AI with data science, which I think is more like actually what the field is, AI is just one part of it. Yeah, they're both huge growth areas, and I got no idea which one's going to be bigger, but both good horses to back at the moment, I think.
Yeah, strong industries that are growing. Well, that brings us to the end of my question asking session. I'm just going to leave a departing message. I can see a few people have Up Bank virtual backgrounds, so you have a strong backing, Xavier. And on that note,
I gotta figure out how to see that. That's awesome.
Yeah, no, there's a few of them. And on that note, I'm going to pass it over to Isaac. He has a few words to say on this event.
All right, so thanks for that, Pat. So I'm Isaac. I'm one of the event facilitators. First of all, I'd like to say a massive thank you to everyone that spent the time to come and join us with this event. I know that everyone's got mid-sems and assignments due around this period, so we really do appreciate your presence with us. Next, I want to thank Pat for being an amazing MC, as well as the rest of the committee that has been working tirelessly behind the scenes to make this event happen. So it's the first time we've ever had an event like this, and I'm really pleased to see the turnout and how everything's occurred. Finally, and most importantly, I do really want to thank the panelists. So we've got Xavier, Vivienne, and Hunter. You guys have been really amazing. So at CCA, what we want to do is try and give our members the best value into the insights and information into the careers that they want to really be progressing into. But what we don't have is the industry, the vast industry experience to offer to our members. And this is where you guys really come in and add that extra level of oomph. What I'd say that you guys really have on top of any other professional in the industry is you guys really have a passion. And I can really sense that as you guys speak. And it's really inspiring for all of us to see what you have to offer. So I know that you guys are all on mute, but if everyone could just give a round of applause to our panelists, maybe an emoticon. Thank you everyone. Yeah, that's it from me. Once again, thank you so much everyone for coming. Happy Easter everyone, and stay safe. And until next time, I'll see you guys later.